And if you think about the way we treat money in our society over the last 5,000 years, Bitcoin checks all of the boxes. The only box it doesn't check is central bank manipulation, which I think it makes it way more powerful.
Bitcoin slump when Iran launched its attack on Israel last week, and raising some questions about the idea that investors may see crypto as a safe haven during times of global tension. Join us right now on this, the halving, and so much more. Anthony Scaramucci, Skybridge Capital founder and managing partner. Please weigh in. We saw you weighing in on Twitter over the weekend when I think a lot of folks were trying to figure out what was going on. We've seen Bitcoin fall since that weekend and effectively stay where it is, despite where equity markets are. It's trying to understand sort of these price movements.
Well, I wish I could understand the price moves myself. I think where I'm coming from is a little bit of longer term as opposed to just the week-to-week or day-to-day price movements. I think the point I'm trying to make is that Bitcoin is on an adoption curve. If you go back to Web 1, Bitcoin is sort of in the 1999 point in the spectrum. And so just imagine where we went from Web 1 to where we are today. And so my point is you won't see this be a inflation hedge or a store of value, as other pundits are saying, until you get over 1 billion users. And so right now, it's going to be way more volatile than people like, and people look at it as a risk-on or risk-off trade until we get to that adoption curve. That's my point.
And given the adoption curve, what do you see right now as the upside number, and what do you see as the downside number, call it 12 months?
Well, I mean, look, you could get shocks like wars, and you could get, God forbid, a terrorist calamity or something like that could take Bitcoin down 10 or 15%. But I think you have a heavy bid on Bitcoin because of the demand from the ETFs and from the eventual drivers of things like the wirehouses that will enter the space, as well as the 401k market. So I don't think you have 50% downside, but you could have 10 or 15% downside just because it's still a risk-on, risk-off asset. But long-term, with the halving coming this week, Andrew, right, I think this thing trades to $170,000, possibly to $200,000. And that's consistent with where it's been over the 15 years of Bitcoin.
I just looked at a chart yesterday. Since June 30th of last year, Bitcoin has been beat for beat with NVIDIA stock. Okay, I mean, nobody's saying it's exactly the same thing, but it sort of moves along this, hey, we're investing in this big picture future. This seems to be a way to play it. The other piece of it is, if the analogy is 1999 and Web 1.0, what was the central asset that you would have bought in 1999? Bandwidth? That's done nothing but gone down in value.
You know, if you bought, okay, let's use Amazon as an example. Okay, right. And I think this is the point that Andrew is trying to make: is this risk on or risk off? Well, in 1999, Amazon was an emerging stock on an emerging technology, and it was quite volatile. And you lost 20 to 50% 8 times in Amazon.
You at one point lost 80%.
Yeah, that one time in March of 2020, it went down 80%. But if you held Amazon over that period of time, $10,000 is worth a little over $14 million today. And so Amazon is now trading consistently with the volatility of the overall S&P 500, and it certainly wasn't
also
doing
producing cash flow
25 years ago.
I use a lot of Amazon. Okay, I don't use a lot of Bitcoin. Is that a problem at some point, and what do you expect to happen when we go through a dot-com bust type moment for the broader market? Does the feeling about Bitcoin shift?
I think if we go through a dot-com bust in the broader market in the next year or two, I think you'll have a price shock in Bitcoin consistent with a dot-com bust. However, if you're willing to hold that asset, which we are, over a rolling 4-year period of time, no one has ever lost money in Bitcoin. And I think the point I was trying to make to Andrew through Twitter and here on the show is that, yeah, sure, it's 14 years old. But it's still very young in terms of the adoption.
You look out your 4-year sort of time horizon. What percentage of Bitcoin effectively is owned by BlackRock on behalf of individuals versus individuals owning it themselves?
Well, it's a good question. So let's say there's 15 or 20 billion now, just using rough numbers, and the asset's got a $1.4 trillion in market capitalization. And let's say it went up 5x from that. And let's say the market capitalization didn't move, it's still less than 10% of the overall ownership of Bitcoin. So this whole notion that the ETFs are going to overly centralize Bitcoin, I think what the ETFs are, though, is they're a great conduit for people that are used to buying
Does
them.
the ETF create more price discovery? I mean, in some ways, you think it should create more price discovery, which in some
Well, it obviously has, though, Andrew. Look, I mean, I think we were 40,
well, but in the initial
45,000
stages, the discovery will always be about adoption, so it should go up. The question is, long term, does it create a sort of different sense of discovery? And you also have to think that the people who own Bitcoin today were always true believers, right? It was sort of a special cohort of people who sort of thought about Bitcoin in an unusual way. I don't know in the future if you have a large volume of Americans owning it through ETFs, hopefully they won't all be true believers in truth. You'd want them to all think different things about it. Well, and I don't know what that means.
Well, listen, I mean, you guys have a lot of skepticism on the Des. I think the skepticism is well-founded. I started out as a skeptic. I think what got me past being a skeptic is the notion that this is immutable. It's decentralized in a way that makes it very powerful. The network itself is scaling. And if you think about the way we treat money in our society over the last 5,000 years, Bitcoin checks all of the boxes. The only box it doesn't check is central bank manipulation, which I think it makes it way more powerful. And so at $1.4 trillion, could this trade to half the market capitalization of gold, where gold is $16 trillion today? We believe it can. We actually think it's going to go through the market capitalization of gold.